quick political policy fundamental question.
Yeah,
With
go.
3 months to the election,
Yeah.
$800 billion still in the Treasury General account.
Yeah.
Do you think there could be any kind of funny business to prop the market up into the election?
Yeah.
Well, again, you've been around for 35 years. You know what I mean?
Yeah.
Your opinion
No,
is
I
good.
do. I'm sorry, I do. I
Of course I
understand
do.
that they talk about how the Fed is independent, but the Treasury is not. The Treasury falls under the executive branch.
Mhm.
And it's no secret that Treasury Secretary Yellen is not popular on the Trump side of the ledger. So it's not necessarily that she thinks she's going to keep her job one way or the other. She may resign after, if Kamala Harris were to win, if Vice President Harris were to win, she might resign. We don't know. She might think, okay, my work is done here. But it would not shock me to see, quote unquote, funny business like some stimulative spending coming from the Treasury. And also, again, we saw the schedule, which the schedule of the Treasury issuance gets announced, but I found out recently it can be adjusted midstream. And they're already talking about doing more bills again, which, Jimmy, one of the things you pointed out to me 6 months ago, that you started to see a trend that they were using bills as cash, basically, for lack of a better way of explaining it. I don't want to go into the weeds with it.
Wonky.
But essentially issuing more bills rather than long duration notes is essentially putting cash into the market.
Mhm.
So I think they're already doing it.
Welcome to the Futures Edge Show. I'm Jim Muriel. That's Bob Iacino. We're recording with Chief Strategist of Path Trading Partners, Mike Arnold. Now, by the way, the stock market, tumultuous volatility over the last couple of days. Now, it is one thing to a week ago be some macro talking head saying, yes, I think valuations are stretched and the market is due for a correction. There's another thing to look at technicals, decide when it's going to happen, but then once it happens, the key is what does it mean and where it's going to go. Everyone, it's lazy to just say, yeah, there's a lot of people along the NASDAQ. They're probably going to keep selling. Let's see what Mike thinks and what the technicals tell us. Thank you for coming, Mike. How are you?
I'm doing good. Thanks for having me back on.
Okay, before we go into the technicals too, let's just take a moment in time to ridicule all the idiots who yesterday morning for a 3-hour period were like, the Fed needs to cut rates now. For the love of God, what are they talking about? I think the economy is going into a recession, but Jesus Christ, the burning timbers weren't falling from the ceiling just because you lost a buck, my friend. Bobby, you got any comments on that?
I do. I would like Professor, I think it's Jeremy Siegel, to just retire. He
Yes.
came on, I think it was the TMZ of financial media, I'm pretty sure, because they love him, and said that the Fed should do an emergency 75 basis point rate cut because the NASDAQ futures had dipped into bear market territory and nothing else had. We need a 7 after the rally that we've had since those famous October lows. Mike, you don't even have to show anyone on the chart where that is because everybody knows what we're talking about when we're talking about the October lows. That massive rally, we get about a 23% drop from there over the course of, say, a week and a half. Is that fair? That's a 75 basis point rate cut with a 4.3% unemployment rate, 2.6% inflation.
A bunch of babies.
But they were even calling for that after the unemployment. It wasn't the 75, but they were calling for we need to go 50. These rate cuts started last week after non-farm payrolls. It's gotten
before.
It was just insane.
Well, before we go to the charts, I want to ask both of you. So a lot of people are pointing to the payrolls number, right? And saying that, okay, this is the trigger. We've got the 2s, 10s, and we could talk about this as a separate subject, Mikey, but we got the 2s, 10s almost positive. It went to -8 on a settlement basis 2 days ago. By the way, we're recording this on Tuesday, the 6th. So you guys aren't seeing this. You're seeing this like a week later. But I want to ask you guys if you think this is the unwind of the Japan carry trade, or is this a coming recession or in the US, or a combination of both, Jimmy?
So I think historically, when the Fed is in neutrality, like they were eyeing an easing cycle, generally this is what happens. The stock market looks for reasons to flex its muscles gets hammered a little bit, pushes the Fed from the sidelines in because a bunch of people run around like Chicken Little that the sky's falling. I believed this was going to happen. Did they use the occasion of the violent unwind of part of the yen carry trade as one of the reasons to sell off? Yes, but remember we were weak before that. But do I give some of the credit to the chaos that move was? Yeah, of course I do. The facts now also throw in the fact that the Japanese stock market had broke like 27% in 3 weeks' time prior to the unwind of the carry trade. But I think it matters. All these people coming out today saying it had nothing to do with it. I think they're crazy. I think the market looks at chaotic trading and gets scared. And as you pointed out yesterday on our short, is that there are very fundamental reasons why people would sell things that are making money if they're long things that are getting their ass handed to them. But Michael?
Yeah. I think it's a combination of both. I mean, I think you're going to see more unwind over the coming weeks because you had to keep rolling the carry trade forward, and now with on the next rolls, it's just generally going to affect things. You're going to start unwinding that more so than you, and also we're going to head into a recession now. Oh, and the last little blip, the last little, the pandemic recession wasn't really a recession. What it lasted like for 2 days. When's the last real recession we've had?
Oh, wait.
No, wait. That's the acknowledged one. Like if you look, for example, on Fred, the St. Louis Fed's economic data website, they do have COVID in gray, highlighted in gray on their charts as a recession. But the last real one, Jimmy's right, was 2008.
Right. And by the way, last year, at the beginning of last year, we did have 2 negative quarters of GDP growth, which I had learned was a recession, but then they quickly changed the definition.
Yeah.
I mean, we're due
Should we
for
move on?
slowdown recession. I think it's been just postponed by all the insane spending by our government. So, but you know what? Recessions are good because they flush out all the crap. The problem is nobody wants any pain. It's back to the market's dropping a little, and let's have 75 emergency basis cut, and let's cut 125 this year. It's okay on a couple week pullback. Really, we can't take any pain.
Bob, it just dawned on me. The market thing, the economic thing, is exactly like Robert Lufkin's book, The Lies I Taught in Medical School, when he talks about feast mode and famine mode for the body and how it benefits from flipping back and forth. And I'm not even joking. Recession versus boom times is the same exact thing. Like Mike says, we're supposed to flip into a recession, weed out the crappy companies, leave the stronger ones with less competition, and then move from there. But we haven't been doing that for the last few years.
And get rid of some of the excess leverage, right? Sonali Basak on Bloomberg, was one of the only remaining reasons to watch Bloomberg, her and Jonathan Farrow, put out used a phrase that I really liked: embedded leverage. There's embedded leverage in the market through bull markets, especially as the bull market gets a little long in the tooth.
Oh, meaning you get leveragey because your position went up so much.
Well, yeah, people who get the leverage is embedded. I mean, a lot of these funds, hedge funds, even private equity, they use leverage to do things. So when you start getting selling, this again gets to the core of the idea that people sell winners in order to cover margin and cover requirements for the losers. And I've been using a gardening analogy. And Mike, I seem to think you know a little bit about plants. That might be something I'm making up in my head, but
you think you're accusing Mike of growing pot, aren't you?
No,
it's not, because I'm wearing the Grateful Dead shirt.
I know he grows pot. I'm not accusing him of it, but no, I'm just kidding. He does, but you prune plants in order to grow them back healthier. You don't just let the middle stalk of a tree grow to the moon and suck all the energy from the rest of the sprigs that are coming out. You prune plants back in order for them to grow into a healthier overall plant. It's the same kind of thing with sell-offs in the market. They are not a negative thing.
Exactly. So let's get on to the sell-off in the market too. We have this S&P chart up there, which I was hedged to the gills and did not nearly cover enough. When the VIX had spiked up to 50, I covered some, and I thought, having the right position on in a chaotic market time is great. but knowing when to take it off is somewhat difficult. So then today I lost money of all those hedges I had on that I shouldn't have on the way up. Michael, what do you think of this market?
Well, first off, we're getting. I mean, the VIX pulled back like 20 yesterday, but I don't think this down moves over. The market can always prove me wrong. We have magnet prices lower. We completed a couple topping patterns, like we had a little mini head and shoulders top in the S&P and Nasdaq, which completed on the spike down. We should still see, from a probability standpoint, at least a retest of the area of Monday the 5th's lows, if not break it. Like in the S&P, we have a very key magnet price around 5060, 5060, which would connect it with the 200 simple area. It would connect it with an 87.5 retracement. It would connect it with a harmonic extension, and it would be in the neighborhood of the area of the April lows, and that's for the S&P. Is that a guarantee? No, it's not a guarantee, but on any route, we've also triggered a massive wedge pattern. So, and that target's even slightly lower. So in my mind, it's still, until the market proves probability wise proves that wrong. There can be long trades, there can be bounce trades, but I'm more conservative on the targets for the bounce trades and more aggressively watching for the rollover trades, at least for the next couple weeks, until we form a stronger bottoming pattern, or until we close on a daily basis back above 54.95.
So when you talk about 50, 60, I want to make sure everybody knows Mike's looking at the futures. So he's looking at the ES. He's not looking at the SPY or any other index, the SPX, whatever you want to look
I'm
at. We're looking at the ES here.
The September futures.
Yeah, so and you can relate it. Like if you see where this is, you'll be able to see it on your cash charts if that's what you're looking at. So are you yet in a mode where you would be more partial to selling rallies than you would to buy dips here, or no?
Yes, I am more partial to selling rallies than to buying dips. And on the dips, I have to have a closer target and manage it tightly from a risk perspective, because the dips can be, or the rallies can be, short lived. Also, when you go through, you guys have been around the markets for many, many years, like I have. When markets are more so making a transition, their volatility tends to increase, which is what we've seen. And I'm not just talking yesterday. I'm talking over the last couple of weeks, what's been going on. Volatility has been increasing. So it's getting edgier, and that can be good both on the upside and downside. You're going to still see rip your face off rallies, and you're going to see pretty potential rapid declines. Now, starting more towards the end of August, we'll get to some cycle bottoms. We could easily then snap back into September, and then it's a free for all up into the election. But I'm not getting aggressive to the downside just yet. If there's a pattern, it can be traded, but it's not just throw your money back in and close your eyes and hope it goes to new highs.
So you, in the past, have talked about one of your favorite harmonics, which I believe is the 0.625. Is that correct?
Correct.
What is that level here? And if you got a couple closes below it, would that be a drop dead switch or no?
Well, there's a couple things. First off, on Monday, from the harmonics from the April lows to the highs a couple weeks ago in mid-July, the 62.5 harmonic based off the futures was 52.47.75. We closed below that on Monday. We've since then bounced a little, but this is just a minor bounce. What that did is shift the short-term probabilities down to that 5,060 area, which also corresponds with the area of the simple 200 on a continuous futures chart. And it gives us in the range of those April lows again. That's why that's my magnet price on any rollover. The bigger thing, and that also gets to the bottom of the wedge area. The bigger thing, the two next key areas, if we did drop below 49.21, That would be the 50% run up from the lows of October. And then the major line of sand where I will probably kiss the market goodbye for a lot longer would be about 4,700. Now, what's interesting before we get to that is if we get a bounce down here, anywhere down here, we might be setting up a much larger head and shoulders pattern. It's still too early to talk about that, but we could be setting up a multi-month topping pattern potentially. Potentially. It's not there yet, but it's something I'm going to be keeping an eye on. And that's not just me putting on a bearish hat. That's me saying, okay, where could this market, we've been in bullish mode since end of last October, but where could this market be setting up for a potential shift? So maybe that will unfold, maybe it won't. We could turn around, rocket back higher, and everything's off to the races again. But some things would have to drastically change, and in the short term, we'd have to get it closed. Just remember about 5,500. 5,500. If we get a daily S&P futures close about 5,500, then the probability is shift to retesting the highs from mid-July.
Oh, wait, did you just shift? Because at first I thought you said 50-50 on the downside. Then you said 5,500. Which one was it? I got confused.
5,500. If we close above that, then we've invalidated the potential bearish patterns, and we should go retest from a probabilities point the mid-July highs. But if we don't see a close above that 5,500, I'm still watching for rollover plays, at least in the short term.
And the key level to the downside is 50-60, right?
50, yeah, 50-60, 50-50, 50-60. I mean, that's a 10-point range on a 5,000 handle future, so it's not that.
Yeah, that's why I got confused. Those levels were kind of similar sounding, 50-50 and 5,500. Okay. Bobby, you have anything else with this? You want to move to NASDAQ?
No, I'd like to go to the NASDAQ, but before we talk about this, I have a little bit of a public service announcement for our loyal listeners. We had Dr. Carrie Ingraham on our show a couple of weeks back, and somebody made a very large, very, very large anonymous donation to the Discovery Institute's American Center for Transforming Education. Now, I don't know who it is. I'm not asking who it is. If it's part of our audience, I hope it was. But she reached out to me and said it wasn't designated to what part of the Institute this particular donation should go. So I'm reaching out to the audience to, if you did it or you know who did it, I don't need your identity. I don't need you to tell us. Just reach back out to them anonymously again and let them know if it was for this show and you wanted to go to Carrie. Otherwise, just let them know where you wanted to go if it was anyone from our show who did it. I really hope it was.
By the way, our show is unbelievably good, our audience, at raising money for great causes. The way you guys stepped up for the Heritage Foundation, amazing. For Carrie Ingraham, amazing. The way you bought books, that we think the books, you guys are just amazing. And you are not at all shy about reaching into your pocket if it's a good cause. And we are humbled by that. And thank you very much. Now what?
So I do have a question about the NASDAQ. We broke through the 200, Mike, and then we closed back above it. And then we had if you want to call today a positive day, I know it's closed already, and I know people are seeing this a week later, but do you see any sort of like light at the end of the tunnel with that test of the 200 and the close back above, which is the red line down at the bottom there?
Interesting enough is we did, funny thing, last Friday we closed just below the 62.5. So the probability shifted, which would mean we'd retest that 87.5 level, which was 17,600 roughly. We did that on Monday. So we completed the short-term probabilities. Do we have a long-term buy yet? No. We could be also setting up for a major topping pattern in the NASDAQ. I know this is going to come out next week, but let me give an example of something, because here's my example that I was talking about. Are there buy patterns, even if we roll over and retest these lows? Are there buy patterns? Sure. Like yesterday, set up a little mini double bottom pattern. So we've hit the first and second targets on that, but that's what I mean. I'm not even counting on it getting to the third target necessarily, because it's just a bounce. You can get bounce plays that are not major bottoming plays yet. So that is my whole point to this. There are trades to the upside still, but in the NASDAQ, the key level, if we don't take out Monday's lows, the key level to sustain another rally is back at $19,621 on a closing basis. Any rally that falls short of that and turns back lower I will watch for a retest of these key areas. Now,
can you show me that level on the chart that you just had, the 19.6?
sure.
Sometimes
19.6
it's
is
kind of small.
right here. We also had a little
black
head and
line?
shoulders top, and then it broke down. You see, and that's roughly the old neckline from the head and shoulders top. The 62.5 is just below that.
Got it.
So we could easily rally, and if you look overhead, we have the rotation zone, which we've talked about in past shows. We have the hooking over 50. We have major prior support, which formed the left and the right-hand shoulder, which was retested on resistance on the 1st of August. So this, even on a rally back to that level, the market's got to do some heavy lifting to really get through that. So that's why, in my mind, it's got to, both from a probability standpoint and just from a pure price action technical standpoint, it's really has to do a lot of hard work to get back into bull mode. That does not mean, now remember, we could go into a sideways choppy market, but for me to get into bull mode in the NASDAQ, we got to get that close above 19,621.
Now, I think now is the first time you'll hear me ask for this, but I think we have to do the Russell now that we started that.
We will. Let me just jump in one more
trade.
thing. Since this is, I'm only on
Sure.
one
Oh, I thought you were done. Good.
month. One of the key levels at this point, based off the last October's lows to the highs in July, 16,700. If I start seeing a daily close on a closing basis below 16,700, followed by a weekly close, confirmed by a weekly close, then really I'm kissing the market goodbye in the short term, because we could easily test 15,000 and in the area of the vicinity of last October's lows. But in the short term, it would need to close below 16,700.
There's a